Hey everyone, welcome back to the channel. I'm your host, crypto researcher and analyst. If you're into deep dives on tokenomics, institutional flows, and what's really moving the markets, you're in the right place. Today we've got a big update. Yes, Theramord, spot Solana ETF from Fidelity. Investments is closer than ever to US launch in the filing. Changes show some serious strategy shifts. Let's break it down. On October 29, 2025, Fidelity submitted Amendment No. 4 to its S1 registration statement for the ETF to the U.S. Securities and Exchange Commission. The key change, they removed the delaying amendment clause, which basically means instead of waiting for the SEC to manually give the go-ahead, Fidelity is opting for the automatic effectiveness path under the 1933 Securities Act. If no one stops them after a 20-day waiting period, the ETF goes live. If you're new to this automatic effectiveness is when the registration becomes effective, without further action rather than the regulator needing to approve it explicitly. That move signals confidence that the SEC won't interfere and shows issuers are aligning to get these products live quickly. Why this matters and what's different. Why is this major first? It's about access. A spot Solana ETF means regulated institutional and retail players in the US can get direct priced Solana exposure in a fund wrapper. Second, Fidelity's fund isn't just tracking the spot price the filing shows. The fund will also stake its Solana holdings via node operators, earning rewards, so you get two things: price exposure and staking yield. Third, the timing and mechanism matter. The ETF space is heating up. Bitwise, Vaneck, Canary, they're doing the same kind of filings. Grayscale just got approval for its Solana Trust the day before, so this isn't an isolated play, it's a wave. When multiple issuers aim for mid-November launches, you can expect flow competition. Fourth, from a crypto researcher's perspective, this introduces new dynamics. Token demand could increase as funds buy SOL fee structures, and staking yield might affect holders, and institutional onboarding might raise market caps and valuation frameworks. Structure breakdown and implications. Let's break down the structure. Fidelity's Solana fund, ticker FSOL, will trade on NYSE Arca. The fund uses Fidelity's Solana reference rate to track the underlying coin. Custodians: Anchorage Digital Bank, BitGo Trust, Coinbase. Custody administrative: State Street is the transfer agent and cash custodian. Sponsor is FT Funds Management LLC. Operationally, the fund will stake nearly all of its Solana tokens with node operators, preserving some tokens for withdrawals and fund expenses. The staking element is important because it adds another yield layer beyond pure price movement implications. If you hold SOL, this could mean institutional buying pressure. A spot ETF with staking yield could create competition for your own holdings. Investors might prefer the fund wrapper for convenience. Regulatory cover and yield, on the other hand, it validates Solana's staking model and network utility. It also raises questions: will there be token liquidity constraints? How will staking rewards flow through the fund structure? What fees will apply? How will the entry of such funds affect tokenomics and supply? These are things to watch. What's next and how to watch it? So what's next? Monitoring the 20-day clock if no SEC objection is key. Also keep an eye on the listing exchanges and 8A filings. For example, the exchanges that will list the ETF, because these must be approved for the instruments to trade. For your analysis, track SOL flows, especially on-chain and off-chain whale wallets and fund inflows. Watch staking reward spreads. Does the fund get better yield than open staking? Compare fees and net returns, and look at competitor products. Bitwise, vaneck, so you understand the competitive landscape. Also, sentiment shifts. Does the ETF acceptance narrative boost Solana's perception as a layer 1 institutional player? Does this narrow the gap between Solana and mainstream assets? Good questions to explore. All right, that wraps up the update on Fidelity's upcoming Solana ETF and why it's a big deal. If you found this helpful, drop a like, hit subscribe, ring the bell so you don't miss my next deep dive. We'll be comparing all the Solana ETF filings side by side and what that means for tokenomics. Also tell me in the comments, do you think this ETF will push Solana's price up, or is the risk already priced in? I'll pick the best comment for a shout out in my next video. Thanks for watching. I'll see you in the next one. Stay informed, stay ahead.